Hey guys, welcome back to the channel. And if you're new to the channel, thanks for stopping by. Today's video is a massive one. It is our monthly series. We're updating the Q3 into Q4 and of course the data for October coming up for the stock markets, Bitcoin, cryptocurrencies, and real estate. So don't go anywhere, hit that like button, subscribe to the channel if you haven't already. It's your home of macro cycle analysis. As I said, today's video, we are covering the works on the financial markets, in particular Bitcoin and the stock markets. So we've got a lot to get through in today's video. If you've seen one of these videos that I do, there is a lot of data that we cover. So if you need to watch it multiple times to take in all the information, be sure to bookmark it or save it somewhere so you can watch it throughout the course of October and Q4 in 2024, because I think this is now where big things begin. It's not going to be an easy ride. The bull markets are never the easy ride. The easy ride is the bear market. At least that's from my experience and what you guys have been saying in the comments section, especially following along this journey over the last several years. We've got heaps to cover, along with something in the title around, the parabolic move begins here. Bitcoin, S&P, real estate, October, lots to get through. Current thesis, has anything changed that I've been looking at in terms of the macro outlook here over the last several years that I've been posting on the channel? The real estate cycle, of course, OND, October, November, December, Q4. I think we're going to see some significant volatility, but I want to show you exactly where in today's video. Economic data, expectations. Obviously, we've seen interest rates get cut and then also money supply increase in the world's two largest economies, the US and China. And that's had some pretty massive impacts in the stock markets. And I think that's going to carry through into Bitcoin. More on that. Global indices. As we've covered before with this stage, it is the winner's curse phase. Some of these terms might be new to you, but don't worry, I will go through those in today's video, along with updating it in future videos, which is why I suggest hitting the subscribe button and the notifications so you stay updated and don't miss the analysis day to day. Market sentiment and trends. Bitcoin. We've had the March signal. At that time, I suggested roughly 4 to 6 months underneath the old all-time high. We are now into the 7th month, and I think this is probably that time where we do see pretty big things happen. Not in a straight line, but that signal helped us out over the last 6 months, and I think we're getting ready for this next particular move, and I'll show you that time frame as well. Altcoin market cap. Big things there as well, of course. October action plan, including invalidation levels. So let's kick it off with the theory. My theory is the 18-year cycle, roughly 14 years up, 4 down. As you can see at the bottom here, we're in this stage here, winner's curse phase. You've probably heard this all before, but this is where everything goes up. And I want to show you that now. Everything is going up, no matter what reason it is. This has been put together by Akil and Phil at Property Share Market Economics years ago. I saw them post about this in 2012, and Phil talked about this years before that. This was the forecast all those years ago, not like these idiots, and I say idiots really strongly, that call for a depression every single flipping year on the way up. Not going to happen. He's basically been calling market going straight up, and we can see that now. We're in this final stage of the market, which is why you should really be paying attention to your portfolios, to your investments, and start to position yourself for this final leg before the next thing. So the winner's curse, everything is up. Take a quick look. The NASDAQ, we've got a day left. This is for all the markets now, a day left until September closes and we move forward into October. It's at potentially a new all-time high monthly close. The Dow Jones, new all-time high monthly close. The Home Builders ETF, new all-time high monthly close. Australia, new all-time high monthly close. Remember, there is still several hours left on some of these markets, and that's barring any sort of significant drop of 1.5%. These are for stock markets, of course. It's unlikely in the case of a lot of these. Canada, these are just other big economies around the world. Everything go up. It's just straightforward. Winner's curse, everything go up, even if it doesn't feel like it in our day-to-day lives. And the data is bad for the economy. That should be showing that you just wait. This market is going to collapse. Maybe it does. The main point is you are trading money you put your money into the market or whatever other markets you do, you want that to go up. If you're long only, this is the time. It's saying up, and we've been saying this for months, probably even years, as I've looked at before. Canada, new all-time high. The top 50 in Europe getting close to a 24-year high. Remember, they have had a bigger issue in Europe than other countries around the world. And that's obviously led with the main ones here with the UK, nearly at a new monthly high. The reason I'm showing this is because when markets break out into new all-time highs, they typically continue up for longer than most of us can expect. And this is basically the time for that to happen in the winner's curse phase. A lot of people look at this as all-time highs, time to short. That's entirely incorrect. You do not try and short these big bull markets that are running away. Germany, unless you want to lose a ton of money. Germany, new all-time high. And that's basically been the message here from Germany for many, many, many years. That's the stock market. Economy, as I said, different story, but basically stock markets are saying higher and higher. France, getting close to a high again. Let's skip down to some of the big countries here. India, this is at new all-time highs as well. This is just like a runaway bull market. Japan, it's hit a 34-year high, taking out that top, and it looks like it wants to come back and test this level again as it's come back, tested those lows, and has now bounced for September and October. China, big news over the last few days. It has also risen dramatically with the word that they're printing more money over there, yuan, and that has pumped the stock markets. Likely going to take out this top here as we close in the next 21 hours. So that would be a strong sign that this low is in, and you've got a bit of a inverse head and shoulders here with the neckline getting broken on very big news. Let's keep going around the world. The US dollar, as we expect to continue down through this stage of the cycle, winner's curse phase. And the rest of the currencies that are in the basket for the US dollar are looking strong. Aussie, Euro, Great British Pound, the yen, the Swiss franc, those are looking strong, which means the US dollar is going to be looking weak for this stage of the cycle. Massive warning on that. As we get towards this peak, and mark my words, copy this, use what you can, go and post it somewhere, we will hear that the US dollar is trash. You will hear cash is trash, don't hold cash. And that'll come towards the peaks. It happened in 2021. It's happened at every single other peak. If you choose to believe that, then you're probably going to continue to hold assets while those assets crash and the US dollar gets stronger. It's basically the safe haven in those crashes, right? If those assets are getting cheaper against US dollars, you're better off holding the dollars to try and buy back those assets. I can almost guarantee that that will happen. Take it or leave it. It's entirely up to you. Gold, new all-time highs, and it is up about 30% since Bitcoin topped in March. And I think that's about to change as well. You can see there's the March move where gold broke out, and it is now at nearly $2,700. There's 31% rise from the open in March. So around the globe, we're seeing asset prices going up at new fresh highs, like silver, potentially breaking past its 50% level. Huge move happening now. It doesn't feel like it right now, this whole parabolic move, but when you look back on it, August was the low, September is potentially breaking this major 50% and these tops. And when you look back in several months, it's probably going to be higher with a few kinks in the way, of course. And then you'll see that that was the low formed. You never know that the low is at the time. Just like September 2022, there was the low and the markets moved from that point. Copper, major asset in or major commodity used in the economy, getting close to closing at some new fresh all-time highs on the monthly chart, that is. So we're looking longer term here. Again, pretty strong on all of these charts. So that basically covers the global indices, bull markets, and the commodities there. I've talked a lot about the economic data here, and to try and prevent another 41-minute video with our monthly updates, I'm going to cover these off quite quickly. So keep up with us. Number 2, real estate cycle done. My thesis, has anything changed? Absolutely not. It is still up, but as you'll see with this next lot of data, the volatility is probably a little bit shaky leading into the election. So basically short term, as we look out for this longer term cycle. Short term meaning the month of October. So what else happens just after October? I think it's important to have a look at that now. You've got the November Fed discussion here about the interest rates, and the money is on another 0.5% drop. I think this is going to be quite bad for markets, well, at least people who aren't in the markets, because it's going to continue to send things skyrocketing. If in fact this happens, whether it's a quarter or a half, things will keep going up, and eventually this won't happen because they'll have to start to put the rates up. Not in the next meeting of December or these ones here. Maybe they wait it out a little bit and they'll start to put them up too late, which is in the later part of this winner's curse phase, probably sometime 2025, right? Which then leads to things starting to roll over post 2026. So that's what I'm thinking with these interest rates now over the next sort of 6 to 12 months. Fear and greed, we're definitely creeping back into the greed as the markets are at new all-time highs. And I've also said in terms of real estate, those prices are higher. And in terms of the Redfin home price index, prices are up. Even though you see these sort of charts come down, that just means that the prices aren't going up as fast as they were year over year, but you're still getting increases on real estate prices in your major capitals. So basically prices are up. It's up in Australia, UK, US, which is basically what this cycle is based on. So moving forward from that, let's get into the nitty gritty stuff. So we'll come down here into market trends, but mostly into Bitcoin and the stock markets, in particular the VIX. I'm going to start with October in a short-term outlook and then go to the longer-term stuff. October market performance, recent 21 years and the election years. So looking at the dotted lines here, these are election years, and these solid lines are every other year. This is just for October. And so in terms of the volatility, as I've suggested here, October, November, December, probably some volatility, bam, bam, down and up, but it's going to be a little bit more jagged. You can see leading into the 7th or 8th trading day of the month, that's your 9th and 10th. Remember, this is trading days, not including the weekends, because it's looking at the US stock markets. Bit of a trend down for 2.5%. This is just the historic outlook. It doesn't mean it has to happen, but it's just a historic outlook. Maybe it comes in a little earlier and then pumps. Maybe it comes in a little later and then pumps. The point is that we've seen over the last 21 years here, and then the election years going back 70 years, a bit of a kind of a rocky road through October. So from that point there, roughly around the 7th or 8th trading day, a bit of a rise for the next 7 days, a bit of a fall for the next 5-ish days, and then a climb out of that towards the end of the month, leading to the 23rd, 24th trading day of the month. Now, if the chart happens to follow something more like the recent 21 years, you're going to get this solid line type of movement where opening at 0, a little bit of a climb, fall back, a little bit of a climb, fall back. Overall, the markets have been relatively strong. September has been a pretty strong month overall, even when the majority have expected it to be a weaker month, all the, Rectember and all that crap. Nonetheless, there's probably a couple more surprises in store for the markets leading into the election before things become more clear and the markets get a little bit stronger and more decisive again. Now, one more to look at before we hit the VIX, S&P, and Bitcoin. The importance about this stuff is that it gives us a bit of a roadmap to what might happen for BTC and cryptos as well. You want to see a little bit more excitement into the markets and more clarity and certainty as we lead into the end of this Q4. S&P 500 average path in all years since 1950 when return through Q3 is greater than or equal to 20%. And so this is assuming that today's data for the S&P 500 remains with a 20% year-to-date gain, okay? And so it's not the same as this data here. This one here is looking only at years that had a 20% move from the beginning of the year until the end of September. So basically the first 3 quarters, 20% gain. October, a little bit of a rise, again, falling into roughly mid-month, again, bit of a bounce, and then falling towards the end of the month. Before that, those final few days of the month take off. And you can see here, similar sort of thing, and then it takes off with a little bit of another bump there, a bump, and then a takeoff at the end of the month. So you're seeing that for October. Now, November is where it gets interesting, gets back to that 0 point, and December, it's all gain from there, right? So this might happen a little bit quicker with the election as well. This one doesn't take into account that it's only election years. It's all the years that have 20% for the first 3 quarters of the year. But nonetheless, they are all basically up. What else can we expect? The VIX. The VIX is the volatility for the stock market. And if we see volatility, the VIX spiking, typically means you're going to see some sort of lows for the S&P. It doesn't need to be a massive low, but you're going to see some sort of fear and significant low, I guess, for that short period. The VIX index, October of election year, so the month before the election, goes back to 1988, nearly 40 years, roughly 36 years of data there. The VIX start, VIX end, okay? All of them are basically up, which means the S&P 500 would have some corrections within that month. All right, that's the deal there. There's your average, medians, and maximums. The VIX, I've gone through this and labeled it up for your convenience. Here we are with the data. Let's start with the Octobers and what we have seen through each of the years going back to almost 1989. It's basically 1990. The green ticks are the Octobers that have seen some significant volatility that has taken out the volatility of the previous month. That's all I've got here. So as an example, let's just zoom into something here. You can see September, this bar. October went higher than it. So essentially, it's got to be more volatile than the previous month, of course, being September. But we saw them this year. We've seen the most volatility from August. So it could be a pretty easy month to break. The top there's around 24. So essentially, we'd see the volatility spike up. If you see that, this is how to use it, as I talked about here. Action plan, including validations. You see this spike up. That could be a good low for the S&P 500 at or around the low. Okay, but at the time, most were probably telling us that it's going to go lower. Remember the yen carry trade fear of August? It was as if the market had to collapse from that point. It was over, but it wasn't. It was the bottom, the absolute bottom, and it's happened with each of these spikes. 21 out of the 33 years, we've seen October spike more than September, basically just the volatility picking up more than September. So about 63% of the time. It's not enough, but you can see that, well, 6 out of 10 times, October is going to be more than September. That could mean that that's the end of the move, or we could have a little bit more. Essentially, the main thing I'm looking for here is volatility in October, possibly good times to be buying up, because my thesis, might not be yours, but my thesis is we are still going up even more over the course of the rest of 2024 and into 2025. So there could be good buying opportunities. More could present themselves, but at least we have something to work with. Now, if we work with the election years only, so 2020, 16, 12, 8, so on and so forth, I've done the numbers here. 6 out of 8 of those years have been good volatile times. So about 75% of the time have been reasonably good. So we can take it back to 2020. Here it is. There was a spike and then the market went higher than that point. So a good buy the dip opportunity. That's the example that I'm using there, and that's how I would look to use it. So over to the S&P. That's the longer term outlook. Let's start with the shorter term and move on from there. S&P has been climbing into new all-time highs on lowered volume. As I've looked at before on the channel with low volume increases, uptrends here, typically the market has come back to fill that gap of the low volume with more volume to the downside, just basically trying to find where the next support level is for the market before it can move higher. It's happened each of these times here, and I've gone back and had a look at some of these rough time frames. You can see on the average, which is the blue line, here are some low volume days and going across to about there. So that period is roughly the low volume period before the market peaked, rolled over to backfill that price area. So there's the price area. The market came back to that. If you know this sort of stuff in advance and you have a rough time frame, well, you're basically forecasting what the market is likely to do. No guarantees, but likely to do. So it's rising here on low volume, comes up and falls back into that. It went further. The yen trade happened, but then it basically bounced from that point. Again, it rose on low volume from here until about there. So all of this price data, before this happened, you don't know that this is going to happen on this side, right? There is a high chance that the price is going to come back and fill in that gap there. Just looking at recent history, the last several months, it's happened time and time again. So if that is potentially going to happen, well, eventually we'll probably fill some of this price range here, maybe all the way back to about 5,700. We're only at 58 now, but it could go a little bit higher first before coming back over the top of that price data. The timeframes I've looked at for this to occur is roughly 4 to 5 weeks from the point of the low volume starting. So the low volume starts from here, roughly under that average, until it fills in again. There it is there. There's 28 days. There's your 4 weeks. And you go back to these periods here, low volume beginning roughly here up until this point. Again, there's your 20 days up for it to backfill. There it is there. 34, which is basically your 5 weeks. Now you can go back and do this over all of the data if you wish. That's what I would do so that you feel comfortable with how you're going to place your trades in, over the coming days and weeks. So there it is there. I think that's a possibility over the course of October, especially leading into the election. So overall, that's the short-term outlook for S&P. Longer term, I think we still see higher prices here. Take it out to the quarterly. It's basically been straight up from this point here, 1, 2, 3. This is likely going to end green as well. So we're going to get a green quarter for quarter 3, 2024. 1, 2, 3, 4, 5, 6, 7. It's done 7 in the past. Many, many green quarters can happen in a row, even with volatile shakeouts. Look at that one there. For October 2014, 10 years ago, October went lower and then bounced to close higher. So some pretty big moves can happen within that month of October before the quarter 4 ends higher. Just as one quick example that I pulled from there. So keep a lookout for that. Not saying that it has to break down from 51, but you might see some sort of quick flushes, obviously leading into the election and then running out to the end of quarter 4. Crypto, fear and greed index, it is climbing again. We are in greed. Hopefully we see some quick flush outs along the way, but this I think is a really solid base that Bitcoin and cryptos can build from into this quarter 4 of the cycle, right? So there it is. There's the base. Each of these times you see this happen. So from these moves, from these big flush outs with weak or very high extreme fear, it's a good base for the market to build from. It's happened each of the times previously, and especially at this stage of the cycle, you can definitely start to see things pick up from here. Not in a straight line, and I would like to see, and it probably will happen, some good flush outs. Watch the price, and the price will probably be higher than the current lows we've seen in the market. The two most important ones right now, 49K in August and 52K in September. They're the two significant lows. Speaking of lows, the interest in search volume on Bitcoin is at its record low levels. These were the levels seen before Bitcoin pumped in 2023, before it pumped in 2020, again around the same month, October. We saw it again, October in 23, October in 2020. And if we had some more data back here, going back years, we'll probably see a little bit more there. But nonetheless, this is typically what we see before the big moves begin. Now, it could be a big move like we saw for 6 months in late 23, 24, or we could start to see it go even more so like what happened in the bull market of end of 2020 into 2021, where you really start to see that search volume pump up. I suspect it's going to be the latter, this one here, because of what I've shared with you with the real estate cycle, that we're coming into the end of this. Everyone feels like, well, I don't want to say everyone feels like they're rich, but the haves have got more, the have-nots probably got less. There's more money in the system. That is a fact, not my opinion. We obviously know that the US is printing, China is printing, two largest economies throwing more money into the system. Therefore, eventually, I think it's going to find its way into riskier assets as more people start to talk about all the profits they're making in their stock market portfolios, in their real estate portfolios, and we're also seeing those prices go up. And then they start to get more degenerate and throw money into Bitcoin and cryptos, artwork, collectibles, all sorts of shit that goes up and comes straight back down. So we're beginning to see a little bit of that climb into the exchange volume. So obviously, Coinbases and all the other crypto exchanges out there. Slightly higher lows and higher highs are beginning to break here for September. Maybe it continues into October. We saw a similar-ish thing in October before the market broke out. So again, you want to see more money coming into the system, and this is a good way to track that to see if there is more money actually coming in. Speaking of money coming in, you probably hear the next headlines come up about the FTX $16 billion fund that's getting released to the victims of the FTX collapse of 2022. More money's potentially coming back. They might not put it into the system. They might be degenerate enough to put it back into the system. We shall see. On to the monthly data. So this one here was for the S&P 500 using our TIA indicator suite. Brand new products here. Check it out. Link in the top of the video description if you want to get a 7-day free trial to use this for your own trading and investing. Nonetheless, I'm just having a look at the monthly returns. I'm going to just check Bitcoin here because the video is going long enough. I've got 2010 unchecked and 2024 because the years aren't finished. October is typically known as one of the best months of the year, along with February and April. So typically you'd see reasonably good returns here for BTC. Quarterly, also looking pretty good. 61% is the second best quarter of the year. So that doesn't mean that October could be good. Just means that the quarter is likely to end in the green as well. Speaking of quarters, this one is a very interesting one for the cycle, because if we don't see a red this quarter, which is very close, it could see a red. It's only 5% up from the beginning of the quarter. We have 1 day left. If Bitcoin was to drop back to 62,700, so underneath the open, we would get a red quarter. Well, then that would be equal with each of the previous cycles. So each of the previous cycles, we've seen at least 3 red quarters. So I've got my little warning here. Warning for the parabolic bull run. Quarterly returns. There's never only 2 red quarters. So this is the interesting part that I'm leaving right to the end for you guys who watch the videos through to the end. I've got a lot more to get on with Bitcoin, right? But this piece here could save your ass when we start to see the parabolic bull run take off and all of the excitement comes back into the market. Look at the previous cycles here. So I'm just going to highlight them. 2021, you've got 1, 2, 3 reds and then a 4th red there as well. So there were 4 reds in that previous cycle. Now you've got the 2015 to 2017 bull run. 1, 2, 3 reds. The reason why this is a massive nugget of gold is that if you were to see a pretty big correction, it might be one of the last times before you see the end of the bull run, right? Because most people are probably going to be getting absolutely shit scared because the volatility is increasing. But just looking at the data here, if this is going to end green and we only have 2 red quarters so far for this Bitcoin bull run, there might be 1 more coming, and that could really throw a lot of people off, right? The quarters themselves, you can see there was 3 quarters here in 2015 to 2017. They were negative. There's a big swing. So within the quarter itself, look top to bottom, still a 32% swing there, but where it closed was only 9% from the open. So pretty big buying opportunity there, basically a big buyback. This one here was only 3.5% from the open, so the close was just under that. The swing itself was still 24%, so a pretty significant move. We saw that multiple times so far for BTC. And the last one here, pretty significant, 34%, and it was down by 9.8%. So multiple 9% there, and then a 3.5%. The other one here, that was 1%, massive swing. I don't think that's going to happen again. It's going from like $50 to $300, and you got 2 other quarters. Each of these quarters had closed pretty close to their open, which means they got bought back, but you had to have your patience and your wits about you to buy up those lows and then get back to that close. Here, 22%, 13%, and then 10%. So that was the bigger one here. That was the tough one. And then you had a 40% correction on the quarter in 2021. So lots to think about as we work our way into the last half of the bull market. Here we are with the monthly look at Bitcoin. So this one it takes its time to get the data together because it's over many, many months. Every time we've seen this happen, the price of Bitcoin has gone on pretty significant moves. 7 months of accumulation is what we are currently sitting at for BTC. Pretty much one of the longest in its entire history, especially at these elevated prices. So a quick recap here. What we've seen in this cycle so far is two, I'd have to say potentially accumulation areas. 6 months was the last one that confirmed that it was accumulation. We haven't broken out yet, but if we do, then this is confirmed as accumulation. 6 months and 7 months. Last cycle, 5 months, 5 months, 4 months, cycle before that, 6 months, 6 months, 8 months, cycle before that, 5 months, 5 months, 6 months. Massive move, pretty significant move, significant move out of those periods, right? This was the only one here. It got interrupted by COVID. It was still a move down and then got back into that zone. So what happens from these points are very significant moves. And I suspect, or at least the way I'm playing my cards, is that there's going to be another very significant move coming from here. Now, I see what other people do. They're like, oh, it's going to go to 200 grand. I don't know where it's going to go. And I've just got an arrow. That's all that is there. Forget where the price is. I'll put it up here just so it looks absolutely stupid. And hopefully you don't just copy that. That's where the price target is. I think that is to come next for October and Q4. Get on the defense as the market rises. Now is the time for the offense, especially for your altcoins. One last thing I wanted to look at here for October leading into the election, because we haven't seen many election years for BTC. What happens before that? Well, a quick look back, it was basically the breakout month, October that is, before the big move in for the next 5 or so months into that peak. The election before that in 2016. Another significant break here, one of the highest closes it had, or the highest close in the start of for that bull market, and one of the highest in its history. Before, another significant move into this final peak, which lasted a little longer because you had a correction here in the early part of 2017. It held out the price for a bit and then took off to the top. And then in 2012, that election, you had a couple of months to go before you really did start to see that breakout, another consolidation, and then a breakout as well. So keep that in mind as we move into this second half of the cycle, which again has been my view on the channel here. We were going to have a right translated cycle, so a right-hand translated cycle. This was just the pullback into the peak. There are many other channels that we're talking about. It was a left translated, it's the move's over, it's going to collapse. I didn't think that was going to happen because we have the 18-year cycle. And if people aren't following this, they're probably going to be misled to where the cycle goes. This has been the absolute best tool that I've found to help with understanding the cycles. So where do we sit right now? October's coming up. We will be in the 23rd month since the low. And in previous cycles, the 23rd month from the low has basically been around that period where the market's about to take off and break significant resistance. It doesn't necessarily mean it has to happen in that particular month. It could be the month after, but it's typically around that period where you feel like you've kind of missed the bottom, but in hindsight, it's still a reasonably good time to get in. The couple of months following that are not the greatest months to be entering the market. So could be your last chance, right? Coming back to the 23rd month of the cycle prior to that, that was the breakout month. It was still underneath the tops here, but don't worry about the market already hitting a new all-time high. The price action itself for BTC has been looks like it's been in accumulation above those tops, which is a pretty strong area for the market to be in. Here, basically 23rd month, the breakouts begin, bit of a consolidation, and then that final peak. And for this cycle prior to that, same sort of deal here. It was in the accumulation before it started to break out into that final peak. Now, I think I promised a video under 40 minutes. I don't know if it's going to happen, but thankfully you guys are still here. If you are, hit the like button. I put a lot of time into the video, so if you do appreciate it, that goes a long way. Like, comment down below. Let's keep going here. USDT dominance has been a very interesting one. It got rejected at the 50% level. And this was at the lows for Bitcoin and cryptocurrency. So watching this has been a pretty good leading indicator, which is what everyone is always looking for, leading indicators, not lagging indicators like moving averages and those sort of things, to help you get in front of the market. So there's August, there is September, a lower high, and you've seen the money flow out of USDT because that's the dominance. Obviously, the dominance is dropping off, going into Bitcoin and cryptocurrencies through the last several weeks. In the short term, if this is to hit this uptrend here, well then, if this is to happen, right, then money might flow back into USDT, taking a little bit of profits from Bitcoin and altcoins, and then you might start to see that breakdown. If you get this breakdown of this line straight away, then obviously that should mean you're going to see more money flowing back out into Bitcoin and cryptos, as opposed to being taken out of the market altogether and profits taken into fiat. I don't think that's the case right now. I think more people are getting more degenerate than getting more scared and taking profits. So either way, short term could be a little bounce here. You'd see cryptos, Bitcoin lose their value. You know, you see some prices come down here, and then you start to see this break down this way, which would be more money flowing back into Bitcoin and cryptos. Otherwise, you just see it break down straight away. So take your pick, be ready for both. The total cryptocurrency market cap, including cryptos this time, so all the altcoins, is at a very strong level right now on the monthly chart here, closing above getting very close to closing above 2.2 trillion. 23 hours to go, so I won't get ahead of myself, but this would be a very strong sign for the total cryptocurrency market cap. This would take us into month 23. It's going to be pretty similar to the Bitcoin analysis, so I'm not going to waste too much time on that here because the video has already gone long enough. That would be the breakout month back there, which means there's not too many months to go to get into that final peak if it is roughly in the second half of 2025. So to October now, that only leaves us with roughly 11-ish months. So call it between 9 and 12 months or so. That's possibly where that peak comes in. So there's not that much time left in the overall cycle, which is typically where these big parabolic moves happen, and people start to get in very, very late. This has been one of the strongest cycles. Just looking at the correction from the previous cycle to that current point, right? There it is there. There's the top. It was 47-ish% from the high at the 23rd month. So a lot of people say, well, this got to a new all-time high beforehand. Could that mean we see a bigger correction? Maybe. But when you look at the percentages here, the total cryptocurrency market cap is 25% away from the previous all-time high. So it's sitting in a stronger position than it was last cycle, thanks to BTC, which might mean that this is going to be a pretty significant move coming up. So there you have it. We have covered Bitcoin. We have covered the Q3 into October. We've covered the altcoin markets and the action plan. If we're to see some of these corrections, they might not be the worst time to be getting into the market. Now, they might not be the absolute best times like August and the September low, but they could be another pretty significant area to continue to add to positions, consolidate your other positions, and get into some of those stronger altcoins, which I'll go through in future videos here on the channel. So make sure you hit that subscribe button, like the content. Thanks again for your support, and I'll see you back at the next video. Until then, take care and peace out.